Hey, what's up, everybody? It's Thursday, August 11th. How's everybody doing? Today was classic, man. Just classic, actually. We got the producer price. I mean, you gotta really, if you just step back and look at what's going on, it is just, it's comical. It's really amusing. The PPI, the headline producer prices, was a negative 0.5%, a contraction of 0.5%. I got so much to say about this. First, I'm going to talk about the market action today. I've been trading a long time, over 40 years. I've been a member of 4 exchanges. I was a floor trader on 4 different futures exchanges. And today was just classic. Yesterday and today together. Because, I've been talking about the monetarists and how they're just freaking out right now because stock market's going up and they want it to crash so bad. We've got 4 rate hikes and the Fed's got to get even more aggressive. And the more aggressive the Fed gets, the market rebounds because, it's their insane view of everything through monetarism. So they just don't understand. This recovery started basically in June and really got underway in July. And by the way, in July, just as a side comment here, I said that we're going to hit 4250 as the lower bound of, I projected a rebound in the S&P from 4250 to 4520. Today we hit 4258 on the S&P. I said that back in July. But anyway, so remember Friday, the monetarists, you had this fantastically strong job number and that, they sold that. They sold that because they have to sell that. They see everything through the prism of their views on monetary policy. And even though it was a wonderful indication of a rebound in economic activity, and rebounding economic activity is bullish for stocks. No, they sold it. And then you had a couple of days of wobbling in the market, and then yesterday we had that really, really benign CPI print, and then they had to cover everything. They bought everything back at a huge loss. And then today, the producer prices comes in at negative 0.5%. And not only were they still short covering, but a lot of these, I think some of these monetarists who had been on the sidelines or whatever, they decided to throw in the towel and jump in. So now they're buying. They weren't buying in June. They weren't buying in July, which was the ideal time if you look at the correct things, which was the reversal in that fiscal contraction. Remember the swimming pool filling back up again, net flows increasing every day. I was telling you how that April tax drain was being replenished, and that all led to a positive environment for the stocks and for the economy. So today, of course, what they do, they jump in. They saw the bullish PPI print. That's 2 days in a row. One day with the bullish CPI, the next day followed by the PPI. So they can't take it anymore. They jump in. And that was the top, the short-term top. And that was so easy. If you're a trader, if you're a day trader, you sell that and the market pulls back. And it's exactly what happened. We had I think Dow closed slightly up, but NASDAQ was down and the S&P was slightly down. So this is all, if you've been trading as long as I have, it's so easy to see this. It's so easy to predict their moves. It's just like child's play. It's like shooting fish in a barrel. Just hand me your money. It's like ridiculous. So what happened? Let me talk. I was going to mention it. One of the things that to me, with these CPI and the PPI print, it says to me very, very clearly is that, and this should be no surprise, is that the Fed completely miscalculated on this. And, this is so typical now of what we have seen with the Powell Fed. And I've spoken about this many times, how the Powell Fed, the only thing it does is follow what the talking heads say. follows what the market prices in based on what the talking heads say. They don't. Powell does not understand his role as leader of a monopoly institution. He just follows whatever the talking heads say. And the irony of it is that initially he had the right view. Inflation is transitory. It was transitory. It was based on factors that were largely related to the pandemic, and then it started to even ease. And then we had the war, the Ukraine-Russian war, and the sanctions, and that threw a wrench into the improving situation, and then it started to go bad again. But he had it right, but he caved in on his convictions. We've seen this so many times already with him. Same thing with Janet Yellen. She goes down as the worst. She's the Treasury Secretary now. We can give her that title, worst Treasury Secretary ever. Powell is the worst Fed chair ever, in my opinion anyway. This slavish adherence to the pundits and whatever the market says. And the Fed is completely miscalculated, and now it's going to continue in this direction to miscalculate until the market tells the Fed, hey, you got to stop. The other irony in all this is that if the Fed just stopped right now, we would see inflation come down to its 2% target or even below. I mean, we're seeing now an improvement in conditions. Bank credit. One of the things I've been explaining to you guys is that every week we've been seeing an increase in commercial and industrial loans. That wasn't happening during the pandemic for the simple reason that all these supply chain issues, even if companies wanted to finance inventory, and that's how they do it through these commercial and industrial loans at banks, even if they wanted to finance inventory, they couldn't get it. And now C&I loans are growing at the fastest rate in like 2 years. So inventory is going to come back on stream. We're going to get a continued pullback in these price pressures. It was all transitory. I mean, here they are. Look today. The futures are still pricing in a 50 basis point. Okay, now it's a 50 basis point rate hike in September. Last Friday it was a 75 because, oh my God, people got jobs. But even 50 is ridiculous. I mean, what they should do is stop, because by raising interest rates, they're only going to impede the rate of decline in price levels. In other words, like I said, if they just stepped away right now and stopped, inflation would come down to their target or even below. But the fact that they're going to continue on with these rate hikes just means they're going to keep general price levels elevated for that much longer. I mean, we're talking about total idiots here. Really. We're talking about basically what has become like a useless institution. I mean, think about it. Now, it doesn't only just apply to what they're doing on rates. It applies to what they did with respect to QE, the quantitative easing, where they were dumping trillions of reserves onto the banks and then had to create a new entity, a new vehicle where the banks were able to shunt off those additional reserves. Otherwise, they would have been in non-compliance with the Fed's own regulatory constructs, with the leverage ratios. I mean, I could go on and on. I mean, in 2019, we saw the Fed, the Powell Fed, bring reserve balances down below the required levels. At that time, they were doing QT like somebody was asleep at the wheel. I think, if I remember correctly, there was something like 13 trillion in deposits in the system. So you had to have 10%. You had to have a 1.3 trillion in reserves. They brought it down below that. Like, get a clue. You make the rules, you enforce the rules, and then you create a situation or an environment that throws member banks and the entire system into basically default against those rules. I mean, this is what we're dealing with here now. And now also we're dealing with a situation where they put interest rates up to a level. I told you this a long time ago. They put interest rates up to a level where they don't have the income from their assets anymore to pay the interest on reserve. So they're going to have negative cash flow, which, you know, they're going to run with that. And they're not going to be able to remit anything to the Treasury, which right now there doesn't seem to be much hullabaloo or discussion about that. But we'll see. We'll see what Congress says at the end of the year when, you know, Treasury's not getting a remittance from the Fed. So all this is like crazy stuff. But this is what happens when you have people who really don't have a clue of what is going on whatsoever. There was no need for the Fed to start ratcheting up interest rates. And now, as we see the inflation rate come down, as a lot of these constraints in the marketplace and supply issues are starting to abate, they're going to continue with this until some pundit or, you know, a group of pundits on TV who know nothing as well start to scream that they're going to have to cut rates, and Powell, like some obedient little puppy dog, is going to follow them. Is this why we need to, you know, go through the whole nomination process and then confirmation by the Senate to have some guy who's going to be watching talking heads who know nothing on TV tell him what to do or her what to do? I mean, seriously? Come on, folks. Anyway, let's get back to the market. This pullback, remember, I explained the dynamic of today, why it's pulling back. Like all of these people who either had their minds blown because they're monetarists and it wasn't working out the way they thought, or people sitting on the sidelines. And then today there was you had two good inflation reports in a row, and then they couldn't take it anymore and they jump in like, really, this is really bad trading and really bad investing, and it is, you know, peak emotional commitment to the market, and you never make money that way. So it's good that it went down today, and it's good that they're going to lose money, and we should probably go down maybe into next week. Remember, Monday we get that quarterly interest payment, $45 billion. August is still going to be a big month. So this pullback into next week, well, we got one more day, right, tomorrow, and then Monday, and then we maybe Monday be down too, and then we have the follow through after that interest payment. I mean, you want to have this pullback as an opportunity to get in the smart way, not to jump in willy-nilly like people did today, because they saw, you know, these are the same, I'm telling you, these are the same people who sold out or went short last Friday on the good job numbers. And then today, they're jumping in the other way. I used to see this all the time when I was a pit trader down on the Florida Exchange. You know, you'd see guys, like there were some guys, I tell you this, we used to use them, they were so cold. Like, you didn't have to know anything about the markets. You didn't have to know anything about the economy or technical analysis or you just watch these guys trade and do the opposite of what they do. They were cold as ice. And the minute they bought, it would go down. And the minute they sold, it would go back up. And that was like a strategy that we used to use on the floor. Like, you pick a guy who's just cold as ice, and you just do the opposite. I'm telling you, the ones who bought today, and even some of the ones that bought yesterday, I mean, we might wipe out all of yesterday's gains, and that's fine. I mean, I'm looking at the big picture. As long as this fiscal stuff still lines up, you know, we're going to have an improving economy, and an improving economy means stocks are going to go higher. I don't look at one day to the next. I look at the big macro picture, and it would be fantastic if yesterday's gains were completely wiped out too. Because who jumped in there yesterday? Either all the idiots who sold on Friday, or the ones who, you know, they were skeptics and then they saw one positive number and they jump in on that, you know, headline trading, just like they did today. Be fantastic. So I like everything that happened today. It's all good, folks. I'm telling you right now, mid-September, if you want to get a little bit cautious, because we got that quarterly corporate tax payment that's going to suck out about 120 billion. That's a time from mid-September to mid-October that we're going to see, you know, it might get a little scary again. But we'll get through that as well. Next year, oh man, with the increase in Social Security based on cost of living adjustment, and with some of this this new bill that was just passed, when some of this stuff starts to kick in, oh man, next year could be really booming. So I'm not worried. But I love it when I see these guys taken to the cleaners. I love it. And believe me, when you see them get taken to the cleaners, that's cha-ching, cha-ching in my pocket and the people who subscribe to my service. Anyway, that's it for today, folks. See you tomorrow. Bye.